everyone, look down below, see the subscribe button, go ahead and press it for me. Thank you very much. Hello, everyone. Welcome to Shannon Confidential. I am Shannon, your host, and Shannon Confidential is a podcast about life, love, and everything in between. Today's in between is going to be really kind of interesting. It's something I've always been intrigued about, but I could never figure out. If you look behind me, Tykr, we are going to talk to Sean Tepper, and he has developed this app, and it basically is a platform, an educational platform. It's a stock screener, and it helps you manage your own personal investments. I think it's incredible, something I can't wait to learn about. He said it's very user-friendly, so that's kind of good for me. And he also has a podcast called Payback Time, where you learn to build your own wealth, your own financial freedom, your business, and he'll talk about what goes on Payback Time. So I cannot wait for you to meet Sean Tepper. Okay, everybody, here he is, Sean Tepper. This is the gentleman I told you about with this fabulous app that I can't wait to ask a million questions about. So Sean, welcome to Shannon Confidential.
Shannon, good to be here. Thanks for the invite.
Absolutely. Now, I got to tell you, I told everybody in the intro that you've developed this platform, so you can manage your own personal finances. It's educational, it's user-friendly. And you said a couple of things to me about, there's not a lot of financial freedom marketed to women. And it kind of struck me. And that's what had me so intrigued. It's like, he's so right. So before we get into all of that, this is all the bread and butter I want to get into with you, but tell people who you are, how you got to this point, developing this program. How did everything happen, Sean?
Yeah, so it's a fun story. I'll add some nice little anecdotes within, but I'll try to make it somewhat short. So my background is software engineering, about 15 years or so. I had a service business from 2006 to 2010. I was building software for small and mid-sized businesses, a lot of websites, a lot of work, didn't make any money. This was a recession. And I was right out of college and I'm like, okay, so I want to be an entrepreneur. Here we go. And it was brutal, absolutely brutal. But fortunately, we did merge with a larger agency. It wasn't like a big payout event where, hey, here's $1 million. You can go off and ride off into the sunset. It's none of that. So all debts and liabilities were wiped clean, which means a fresh start. So what am I going to do now? Right. And I knew the type of business model I wanted to create, which is called SaaS, software as a service. You think of like, Zoom as a SaaS or MailChimp or anything that's subscription. But I didn't have an idea. So my option was, let's just go work corporate America. So I worked for corporate America for a little over 10 years, GE being one company, Kohler being another. There are a few others in there as well. But in the parallel to that, I did investing. I started investing in like private businesses, like local tech startups, thinking I'll get in on the ground level and watch that a few $100 turn into $1 million. Well, needless to say, that's a lot easier said than done. And I never really found success. And I did that for about 5 years, which brought me to about 2015 or 16. And that's when I knew I'm like, okay, so if I want to achieve financial independence and kind of do what I want, I have to get serious about this and do it the right way. So I turned to Warren Buffett, Charlie Munger, some of the guys who have been there, done that. And I just went down like the YouTube rabbit hole, read as many books as I could. In finances, as we all know, it can be pretty boring, dry, depending on who you are. But in most cases, there's a lot of words people don't understand, a lot of acronyms. And I'm like, okay, I get some of this, but some of it I had to look up, of course. But I was able to, fortunately, find a guy by the name of Phil Town who wrote a few books. One is Rule 1. The other one is Payback Time. But he provided a bunch of math. I'm a total math nerd. So I put all this... I started putting these calculations from those two books into an Excel sheet. And the goal is really just to remove my emotions from investing. I'm like, I don't want to be thinking and looking at the stock markets and guessing, right? Right? Like guessing and hoping a stock is going to do well. I want to know in the least amount of time as possible so I can go do what I want to do. And I started working on this and started making some pretty good returns, usually between 15 and 50% per year, whereas the market average is around 8, somewhere around there.
You're doing good.
Okay, all right, this is pretty good. So I did that for 4 years. And that led me to 2019, where I started talking to some retail investors, which is the average Joe like myself, just a regular guy out there in the markets. And I started sharing it with a lot of people, and everybody was like, you know what? You should consider turning this into a software to share with others. And I'm like, all right, let's do this. I got my business idea 10 years later or something like that. And
it's fine. At least you got
one. Better late than never, as they say.
Yeah.
And it took about a year to build the first version, which we launched in summer of 2020. And now we're just shy of 2 years old, and we have about 4,500 customers on the platform. So we're growing, slow but sure. But going back to your comments about serving women, and you're right, like that's one thing that's really common. Even a lot of the screeners out there, their logos can have like men as a logo, like a guy in a suit and tie.
Always.
And you are definitely missing the mark, because the female audience is really entering this market quickly. They give you context here. I don't have percentages based on male and female, but the retail investor segment is growing extremely fast, not just in the US, but around the world. It's like 5% in the US versus the people joining or working with financial planners is 1%. So it's growing by 5x. In India, it's like 20%. It's incredible.
I wonder why that's such a difference.
Well, there's a huge population. That's one thing. And I think so many people close together, they're looking at each other's phones like, oh my gosh, what are you doing? And what are you working on? And people naturally have FOMO. Like when somebody else is making money or money is working for them, they're like, how are you doing that? And how do I do that? And with these different platforms like Robinhood and TD Ameritrade and whatnot, they're all free to join. So the barrier to entry is lower, but serving that female audience is really important, because in the household, women are making those financial decisions as much, if not more, than their male counterparts. You know, if you're buying groceries or you're budgeting for a kid's college education, your fingers on the pulse, right? And we knew, like, we got to create a platform that serves both. So we're doing our best. We have a lot of female customers. We try to ask questions. What are you looking for? And get their feedback. So
I got a whole bunch of questions, but first, how do you make an app female friendly and male friendly? What is that difference? Or, how is it more female friendly versus certain things are more male friendly? Just explain that.
Yeah. So this can actually serve both, but it's got to be really easy. So less words, less like long form sentences. How do you get to data? How do you make data that's attractive and good looking? Because like looking at a Excel sheet is very dry, and that's not the stereotype here. It's the 55-year-old male accountant. Like that's his jam. He can do that all day. But can the average Joe do that? And can really women, do they even want to do that? Answer is no. So how do you lay out the data so it's really easy? It's like you want answers and you don't want to deep dive and look at things forever. It's like, is this a good stock or is this a bad stock? And it should be clean lines, soft colors. The font has got to be, for starters, don't go with Times New Roman, right? Right. Let's make this a little more attractive. So that's the thing, is the aesthetics of the site is one thing. Okay. Another thing is we're working on, this is coming soon, is most women are not going to sit at a computer and look at stocks. They're on their iPhone or their smartphone of some sort, right? Mm-hmm. They're not going to play it. So we know that's another thing, is we need to release an iPhone app here in the future. Right now it's a web app. You can use it on your phone, but it's like mobile friendly, but it's still not the same, like a nice, sleek iPhone app. So.
Okay. All right. So I have a financial advisor. He's been great. At least I think so. I haven't lost everything. So he's been doing something right.
Sure.
And I have friends, I have male and female, but I do have a lot of female friends that pay attention to stocks. They have someone else doing it, but at least they're paying attention to it. And I'm not going to try to dumb myself down here, but I'm just going to be straight with you.
Sure.
I can understand when my financial advisor talks to me. I know what he's saying. I get what he's doing. I get the process, the plan, how we're going to move forward, the changes we're going to make. That's great. But the second I leave his office, if someone say, hey, how did good things go with your financial advisor today? I'd be like, look, I agree with everything he said, but I have no way to repeat it to you. I can't explain it as much as I just understand it. So when I was talking to you on our intro call and you were talking about how this really gives you the ability to do it yourself, it's user-friendly. It's going to be prettied up because there's like girl-friendly parts to it. I thought this just might be the time that maybe I start going about this a different direction, or at the very least, just make sure what's being done, I can verify it. You know what I mean?
Right.
So I just thought, wow, this was a wake-up call to me that I've seen so many of my friends do this and I found it interesting and, oh, how cool, they're checking their stocks. Like, just yay, that's wonderful. But it's like, well, you know what? Maybe I can too. So that's what really got me with you and Tykr and to try to see if I can do this.
Right. Well, thank you for that. And that's what we're trying to do, is empower the everyday new person out there to the market, because people are finding out about stocks either through a friend or YouTube or a podcast, TikTok, whatever. And how do you lower that barrier to entry, like make it super easy, you know what you're getting into? Like with Tykr, you can join. We have a 21-day sequence right now where every day you get a new tip. Like, when do you buy? When do you sell? Like, it breaks it down, and we try to give it to me in layman's terms. Don't ramble on with all this tech jargon. Just give me, what do I need to know, and move on to the next. And we're really good about that. And again, our interface and how you look at stocks and Tykr is, yes, it teaches you how to invest, but it scans and analyzes stocks for you and really sums it up. Is it a buy or is it a sell? And you get the color coding. If it's green, it's good. Red is bad. That kind of stuff. So,
and how do you make those decisions?
That's where that algorithm comes into play. And I won't go too much into the math, but we look at I'll take a step back here. When I was going into YouTube and reading books, there's a lot of people in finance who they don't use enough data points. And I look at it in my role in software engineering. When you are launching a new platform like a website, you don't just look at it once and test it once. You have to do rigorous testing over and over and over. Well, I found that in finance, there's a lot of people, they're not looking at all the data, but Phil Town, thanks to him, he was actually somebody that looked at everything. And I'll use some basic numbers here. Like, you've got your sales, what are your sales in your business, and your net profits, and then your debts. Like, what are all those things? And there's many more, but we look at a lot. Like, I won't say everything, but a lot, to really get a holistic view. And that sums up for you. You don't have to do that work. I don't have to do that work.
Okay.
I can literally just log in a Tykr. Somebody mentions like GameStop or Apple or something. Mm-hmm. I can log in and I can see the truth. So.
All right. So if it's a good stock, it's a bad stock, how do you choose? Do you have your top 10 that you work with? How do you decide which ones are going to be on Tykr?
Sure. Yeah. So right now we have a data provider. We have about 30,000 stocks on the platform because we're global. We got customers all over the world. But that really is a question I turn back to you and whoever's investing, is how many stocks do you want to own? In our training and our education, we tell people try to hold between 10 and 15 stocks. So you can create a watch list. And that watch list, we try to encourage people, try to get as many on sale or buy stocks as you can. If you're curious, my portfolio is in there, so you can literally mirror me. You can see what I'm investing. You can invest side by side with me. That's one thing that really separates us, is there's screeners out there, there's people out there, but they don't share their portfolio. Of course, you're not going to see the dollar amount, but you're going to see the stocks and what percentage I hold of that stock. So there's a lot of people that'll be like, oh, Sean's in this, I'll just go with that. So makes it easy.
Trusted advisor. Now, is this something where you have to really pay attention that, you're buying and selling quickly, like we see on, in the movies or, on Wall Street? Or is this something, can you set your own pace, or how do you do that?
Yeah, good question. So you definitely want to be long-term focused. So this is not a trading platform. There's people out there that they want to be traders. They want to be buying and selling stocks, which, just to summarize here, trading is a job. You have to sit there at the computer. You're going to look at charts, and we're not about that. We're the Warren Buffett strategies. You want to find good stocks. You want to hold them, but you want to use Tykr to kind of monitor it. And fortunately, if anything changes with your stock, you get a notification. So you can go on vacation, you can go enjoy your hobbies, whatever. You don't have to be looking at Tykr. Tykr's doing the monitoring for you, which I want. That's one thing I wanted, because I don't want to sit at a computer. So if something changes, you get an alert.
Okay. All right. So just as if when I was talking with my financial advisor, it's diversity. You could be aggressive. You could, be safe. Do you have that ability with Tykr as well?
With Tykr, it doesn't really give you like buckets, like I want to be aggressive or conservative. It's really giving you just strong, safe businesses. But that is something we thought about as like maybe a template portfolio of stocks to look at that are more aggressive or like more conservative. I know Stash does that. Stash is it's like a broker. They're only US based, I believe, but we want to kind of do that in the future. And we're new, of course, so we're adding new features, but that would be a fun feature, not too hard to add, but you could pick like like you're conservative or you're aggressive. Maybe you just want tech stocks, or maybe you just want like retail stocks, something like that. So.
I love it. I'm telling you, I'm going to try it. Now, one thing you mentioned earlier was in your teachings. So you said, when I was reading about all this, it was an educational platform as well. So you go onto it. What are the teachings? Is there, videos people watch? How do they learn how to use this?
Yep. So each day you get an email with a new like educational tip. You can also skip past each email. You can read everything on our site. And then I do have a YouTube channel that I did a few videos on some of the features within, how to use the tool. And then I'm always trying to do videos on different stocks. We have the podcasts. You can learn a little bit there as well about stocks. I do talk about business, but the theme of the podcast is it's changing to be more stock focused and investing focused. But there's definitely a lot of areas. One thing I will say to help answer your question there, going back to the features, is we're going to be adding like an educational module, kind of like Duolingo or Babbel. Those language learning apps are becoming super popular. Really short text, short snippets, gamified with progress bars. We're going to do the same thing in our tool with investing. So it's super fun, super easy. That's going to be definitely a level up from, you can read again the emails, which is nice. People really like them, but this is going to be definitely cut above that.
No, I like it because some people are visual learners. Some people can just read and soak it in. Some people can look at a graph or different things, and then it makes sense to them. So I like that you're offering several different ways to absorb this educational information to then be able to utilize Tykr better. So I like that you didn't, when it comes to numbers and financing and stocks, it is a different language for some people. So I think it's really, really smart that you're offering it to be taught in different languages.
Yeah, you're right. Different formats. There's people out there, like I was talking to somebody the other day about installing some new tech in his actual home. He's like, you know what I did with the manual? I just threw it out right away and I just went to YouTube. I'm like, right? Like, who's going to read?
I do that. Forget this. Somebody simplified this already.
I'm going to YouTube right now. I'm like, good call.
All right. So I will tell everybody watching and listening that the different YouTube channels, the links, everything to Sean and Tykr and what they're doing will be below us in the show notes. You will definitely be able to access him like that. Not a problem. So I don't want anybody to get nervous. You talk about YouTube videos. I'll make sure you're linked up. It's okay. So there's a couple of terms that when we were talking about that, I was trying to figure out, okay, what does that mean?
Sure.
I'm going to try to find him here. Just how you were choosing, like when you're choosing the investments that are going to be on Tykr, do they have to meet a certain quality or numbers or do they have to be, at a certain level of appropriate for Tykr?
Yeah, so we have a scoring system right now. It goes from 0 to 20. In the future, we're going to be changing that to 0 just because universally around the globe, that 100-point mark feels to most people like that's what you're aiming for. So the higher the score, the safer the investment. In other words, the stronger the sales, the lower debt, stronger the balance sheet. And a lot of that you don't really have to know. It's the score you need to pay attention to. So our stocks are like an on sale or buy. It's green if it's got a score of 10 out of 20 right now. Soon it'll be 50 out of 100, but 10 out of 20, that's pretty good. Like this algorithm is very rigorous. So if you can get higher than 10, you're on the right track. Then it also looks at, and it does this for you, is what's called, it looks at the fair value or intrinsic value. That's what a stock is actually valued at today. Like for example, Microsoft I was looking at today is like just shy of $300 for one share price. But the fair value, the intrinsic value, as they say, is like over 1,400. So that's what it's really worth today. So what we do is we calculate that, and that shows like, hey, where this stock should be. And you want to look for stocks that have a margin of safety greater than 50%.
I was just going to ask, what's your margin of safety?
Yeah. So with Tykr, it's the two that need to align, that score and the margin of safety. If they both meet, then it's green, then it's on sale, because it's that summary, which is either on sale, watch, or overpriced. Overpriced being red, on sale being green. So you want to look for greens, and you can see how it breaks down, of course, behind the scenes.
Okay, so you do have the ability, even though it's red light, green light, you kind of make it simple. But if someone wanted to dive in and just make sure the research was correct, they still can gather that information from you.
They can see, they don't see the actual calculations in the platform. I'll get to that in a second, but they can see how the math comes together to a degree. If you're really curious, this is something else that makes us unique, is our calculations, all the math, which again, a lot of it was inspired by Phil Town, about 70%. I kind of started with our own little spin to it. And then one of my partners, Alger, he's our CTO, he added a little more flair to it as well. That's all available on Tykr.com. We have all the education is free. You can see the calculations for free. We made it open source. And we would rather do that than like closing it up like a hedge fund and we have our secrets, but you trust us, right? Like we didn't want to. Sure, okay. We didn't want to do any of that. So you can definitely take the calculations, create them in Excel. You could go create your own version of Tykr if you really wanted, but hopefully you stay with us.
Okay. And how did you put together your financial team, the ones who are making these decisions, making these red light, green light options?
Well, I put together the original algorithm and used it for like 4 years in Excel. So it was already pretty much built. We had to turn it into code and then into the actual application. So it was really just a team of software engineers, which any tech company right now, we just keep building the tool, adding new features. But of course, the algorithm, to be honest with you, once we got it set up, we didn't really have to change it. It's just, maybe a few little tweaks, but that's it.
And we hear a lot of that, especially, in this with the finances. We hear algorithm in social media. Everything's based on an algorithm. Just in case people listening are not aware of what that is and how it, reflects in your area, explain what that algorithm is. What are you looking for? What is it?
Yeah, so it's just a bunch of math calculations looking at, and I'll break this down for you so it's pretty easy to understand. So we look at 5 years of data, and we want to make sure that the sales, for example, is increasing year over year over 5 years. It's kind of like, let's say you put together a PowerPoint, you're presenting to a bunch of people, your business or your boss, and you want to show where this is going. And you're going to show this pretty chart that shows those numbers increasing year over year. Of course, if it's going the opposite way, you're like, oh, this looks terrible. Why would I look at this? Well, what we're doing is in the 5 years, we're looking at your sales to make sure they increase year over year, your net income or profits, your free cash. That's like Apple has got a lot of free cash to spend on things like new products and new tech. You want to see your debts decreasing. You want to see assets increasing. There's a bunch of others. But it looks at those things year over year and kind of rolls everything up into this point system is really the gist of the algorithm. So it's not like anything too fancy. There's some complex algorithms. I'm sure we've seen the Social Dilemma on Netflix.
Crazy.
Yeah, like those are some scary algorithms that kind of use us as the product, humans as the product, right?
Yeah.
I tell you what, like Tykr won't have any of that. It's just looking at the boring financials and making it easy to understand.
Okay. And are your stocks that you choose, are they within the US? Are they overseas? How do you come up with that?
Yeah, so that we can't really control. We try to get as many as we can because our global footprint is growing. But I'll give you a quick little list of the countries that are on Tykr. So we've got stocks from the US and Canada, all over Europe, most countries in Europe. Then we have a fast growing part of the world is actually South Asia. So India, Malaysia, Indonesia, Singapore, and then you move on to Australia and Australia and New Zealand, and then kind of scattered parts of the world, like a little bit in Africa, I think, a little bit in South America. But we do have growth opportunities. So there's about 100,000 stocks around the world. We have 30,000. So we have some room to grow, you could say.
Yeah, but that's pretty good. That's really good.
Yeah.
Oh, I'm telling you, I'm so excited. I can't wait to go on and do this.
Cool.
So I think I'm appreciative that someone like you took the time and actually tried to find a way for you and then figure out a way to make it better for everybody. I love people who pay things forward. And part of, paying it forward and doing what the people need and want. What's your security like? Everybody's afraid of their, privacy or, once you become part of this, how is your privacy protected?
Oh, so in a platform like this, like in other words, like if somebody were to join and make sure their information is safe, like, yes. Is that kind of what you're getting at with security?
Yeah. People want to know this. Yeah.
There's
so much bought and sold. You click on one thing and then you're just, it's so annoying.
Oh, of course. Like with Tykr, I mean, we have what's called two-factor authentication. I don't know if you use this on any other platforms, but when you log in, you get like that second text or email notification. That's something that we have built in. So you can join. I'm not using it myself, but then again, the information that I'm saving in the platform, like right now, it's just my email address and my name, which is public anyway. We will be allowing people to add their portfolio to the tool soon. That's a little more sensitive. Like people won't be able to see your numbers, like your portfolio size, but you'll have the ability to share it with other people. So let's say John Doe out there or Jane Doe is like, hey, I want to share my portfolio with my friends. They can put it out on social media. It's got Tykr's branding, but it breaks down like all your stocks. That would see the percentages. Like it's not going to show the dollar because people don't want to be like, I've got a low number, a high number. People will never know that. So it is really, I mean, I have to say we've got an A-class software engineering team. I've worked, again, for large corporations with very talented engineers, and the team at Tykr they're a cut above. These are the best of the best. Okay,
so they can feel secure uploading that portfolio, uploading this information.
Yes.
That it's going to stay there, and it's not going to be found out or be stolen or used as hijacking information.
No way.
Okay, well, that's good to hear. Now, you mentioned Payback, which is your podcast. Explain how that came about and what people can learn and listen to from there.
Sure. So I love listening to podcasts. I mean, I think a lot of people out there agree. Like if I'm working out or driving, I always have a podcast on. And I'm like, I would really like to do that because I'm naturally a curious person, and I chose two different directions at first. And we're moving into season 2 here, but I'll give you a little background, and I alluded to this before. It was kind of like a split between interviewing entrepreneurs, like how did you build your business, and what kind of revenue are you generating, and how did you make your first dollar? And then on the stock side, like how did you get, and we like to interview people who are absolute beginners as well as people who are a little more advanced. But what was your first dollar? What was your first stock? What do you invest in today? What mistakes did you make?
That's a good one.
And my team has been monitoring the clicks and downloads and the views, and it's like exponentially greater with the stock investing. Like, so my team actually in the last week, they're like, you really need to get more content on stocks, less on entrepreneurs. Okay. So Yeah, it's a slight direction change, but it's a lot of fun. So yeah, we're really focused on interviewing people who want to talk about stocks and investing. If there's any listeners out there who want to jump on my show, you're welcome to. So throw that out there.
And you said we. So do you have a co-host? Who's the we for Payback?
The we, good question. I am the only host, but I have a team. I have an editor who edits the episode, and then we have a promoter who promotes it on the social channels. We have a really fast turnaround. We do not wait a few months. We try to get out podcasts within 2 weeks or less.
Okay. I think it sounds incredible. So when you have all this knowledge, this investment knowledge in your head, and you see what's going on in the world and, the craziness, what would be your quick tips for somebody listening or watching right now?
This is one of my favorite conversations. Is a lot of people right now are fearful. And just to summarize, like, it is the end of April, the last 5 months or so, we've had issues, really 3 reasons. Omicron back in November, that caused fear, so the market started dropping. Then we had, turning the new year, you had Russia and Ukraine, which that is kind of stabilized. It's not over, but the fear and uncertainty is kind of removed. The third reason is the issue at the moment. It's not a big issue, and that's the interest rates. We have inflation rising. So what does the Fed do? They raise interest rates to counteract that, to drive down that inflation. And that right now is causing this fear. We use a term that Phil Town uses called stockpiling. That's when you buy when everybody's fearful. So right now, don't join the crowd and start selling. Now is the time. You want to hold strong. You want to be buying more stocks. So I've been buying a lot more stocks over the last 3-4 months.
Okay. So you definitely realize that now that and we all know it, the interest rates are going to go up. It has to. That usually puts people in panic mode. I know we're trying to find a house. Does that work in our favor? If they go up, maybe people can't afford to buy the house, or they have to look in a different price range. So that kind of makes it a little bit easier for other people. There's always pros and cons depending on where you are financially for all of that to happen. So you have, the interest rates might be changing. People are talking about, maybe there's going to be food shortages. Elon Musk just bought Twitter. Mm-hmm. How does all of that affect financial markets? Because I think it does. People panic in all different ways, but it always affects them financially.
There's all these things happening, like every day, every week, every month, there's something happening. And there's some excuse people can come up with to say, I'm going to wait. And that's the worst thing you can do. You got to look at it this way. Like, people who invest in the stock market, you have to realize you're not gambling. You're investing in businesses. Businesses are always selling products and services no matter what's going on in the world. There could be, I actually did a article on the site that goes back to World War II, was not every, but a lot of conflicts in the world and how long the market went down with each conflict. And it's always shorter than we think. And they're all tragic, like they're all bad. But to give you an example, it actually had the JFK assassination on there. And guess how many days or how long the market went down after that event? Horribly tragic, but how long was the market impacted?
A month?
1 day.
Wow. All right. That I didn't expect.
Yes. And there's more like that. Is the market always behaves different. And that's the thing, is people can be predictable. Their emotions and fear can set in, but the market and business is always correct. And what happens is every quarter you have your earnings reports. And I won't go too deep into detail here, but when an earnings report comes out and it shows that, hey, this business is continuing to sell well, they have good profits, guess what happens? The share price, it keeps going up. And that repeats every quarter. Like Netflix, you probably saw this week, took a nosedive, like 30%. Guess what? They got some corrections to make. It's going to kind of stabilize to the next 3 months from now, that next earnings report. What are they doing different? And that's what happens is we're going to see things turn around here. Our market, yes, a little volatile right now, but it's going to turn around.
Okay. And how do you think, how long until, it turns around? It's kind of crazy right now, especially real estate. Everything's a little crazy. So turnaround, I know, not to interrupt, like history repeats itself. I get all that, but
yep.
There's just I guess you could never talk in factual, but as you say, it's not nearly as bad as what people, time wise anyway. What are you doing? What is your best advice?
Sure. Well, I've got a few answers there. So real estate, yes, you have interest rates rising. I think your opportunity from here, I would probably take action. They're probably going to continue to rise, right? So if you're going to buy, you might want to take action now. I'm not a real estate expert. With the stock market, as I mentioned, I am definitely buying. Like, stockpiling opportunities don't come around often. And I'll give you a little context here. So 2008, the recession hits, and people felt like it lasted years. Oh my gosh, gloom and doom going on and on and on. But get this, market went down like 38% in 2008. How much further down do you think it went in 2009?
I don't think much further.
It didn't go down. It actually went up 24%.
Okay. Wow. Okay.
So, and that's significant. Again, not back at those highs, but what Tykr does is it teaches you to invest in individual businesses. And here's the reason why. When you hold a large portfolio of like index funds or ETFs, which are like a bundle of 100 stocks or more, some more or less, you have a lot of stocks in there holding you back. So if the market goes down, yes, you're going to feel it because it's going to stay down for a while, but stocks are going to go down. Like I said, that next earnings report comes out, has all the green lights you're looking for, and guess what happens? Takes off like a rocket. And there are stocks, I did a little research, that they were buy ratings in Tykr, but they didn't go up 24%. They went up like 70 to like 150%. A lot of them.
Wow.
So yeah, so when the market goes down, and this is something I did with COVID 2 years ago, the market went down, I think it was about 30%. It was a really short pullback. And of course, everybody's fearful. Oh my gosh, this is it. It's going to last forever. We're done. We're doomed. And I just bought like crazy. I stockpiled. And that year, I think the market went up. I got to look at my returns. It corrected. It made like 16%. My returns that year, my entire portfolio was 120%. That does not happen often because we don't have those large pullbacks. Now, when the market does well, like last year, it was a really good year, but there are no opportunities to really buy, to stockpile. So the market went up 26%. I made 28%. I'm still very pleased by that, but I had no buying opportunities. But this year, guess what? 2022, don't sit on the sideline. This is your time to act. If you got extra cash, get it in the market. Buy some great businesses. Tykr, of course, will tell you which ones to buy, which ones to avoid.
Click on the green ones.
Yes, indeed, yes.
I like this. You almost when you're doing this type of investing, you have to remove your emotions. You have to work when things aren't going quite right. That's probably a really good time to invest, is what I'm hearing.
There's an old saying, I think Warren Buffett said it is, be greedy when the market is fearful. And of course, there's the flip side of that, be fearful when the market is greedy. But yeah, you're right. You do have to train your emotions. And that's one thing we know we need to do better with this Duolingo and Babbel inspired education, is like a section focused on emotions. Like how do you, and like a reminder, right? Is like when you're using the tool and the market's going down, we will be notifying you, like, remember your training, remember this training module or this section, and we'll give them fun names. But like when the market's going down, just relax. You're investing in businesses, right? They're not going to shut down tomorrow. Apple's not going to shut down tomorrow, right? They're going to keep selling. So
I love it. You must have so many people coming up to you. I mean, it's like, stay back, people. I can't solve every problem. Especially because you have the ability to explain it so easily. I can imagine just everybody's calling you all the time.
Well, I appreciate that. I love it. One, I'm really passionate about investing. I also like teaching, like you, we've all done jobs in the past we probably weren't very good at, nor did we like. Well, I've been there. I've worked for places that, I did not love it. So to do something that I love every day, this is amazing. Like I get to talk to people about stocks and every question, like it's awesome. I could do this all day.
Oh my gosh. I can't wait to dive into your site and really start
Sure.
looking and trying to understand and watching the videos to just, I'll I'm like, there's no chance I'm ever going to get to your level, but I just want to get to a level that I can have the conversation and I can repeat the conversation. I want it to click. I want to be able to understand what I'm doing.
You're going to go into those conversations with your financial advisor probably armed with a little more knowledge than he's ever going to expect, which is a good thing.
That's a good thing.
And right. And I will say this, like, there's a lot of people who have an advisor, and we're not telling you to leave your advisor. Keep your advisor. That's great, because they're really good for stuff like taxes, right? Like not doing your taxes, but tax mitigation, if you make more money, so on and so forth. They know what to do with that. So they are the best of the best to deal with that. Whereas finding great companies, I actually was just on a podcast with a buddy of mine. He's an advisor. He actually tells his clients, open up like a TD Ameritrade or a Robinhood or E-Trade and just play with some money, get some money in the markets. And as you increase your confidence, you will naturally find that it becomes easier as you go. It's like riding a bike. That first step is the hardest, but once you like buy your first stock, everything after there becomes actually pretty easy.
I've learned so much just speaking with you, Sean. I think like everything you're doing with Tykr, with your podcast, what on earth do you have planned for the future?
Well, in the next month or two, like I said, it's end of April. It'll be like June. We're aiming for is the new version of Tykr. It'll be a updated design, new features people are looking for. There will be new education. It'll be June or July when this educational module. So those of you, totally welcome you to join the platform, but you're going to see some really fun changes. But that new Duolingo, Babbel inspired, teaching you how to invest, gamifying it, making it fun, adding progress bars, stuff like that, I truly believe that's going to be the game changer around the world, because nobody's doing that today. And that it's like me, I'm refreshing my Spanish right now with Duolingo. I took it 3 years in high school, and guess what? I forgot most of it. Well, guess what? Muy bien, some would say. But yes, I need to refresh that. And those apps just make it super easy. Like, why isn't somebody doing that with finance? Well,
here you go.
We hope to do that.
You are. I love the progress bar. I'm such a progress bar person. I always want to move it. Mm-hmm. I want to see my scale go up. I mean, I love that. That is so mentally rewarding. Good job.
It is that. Just a quick segue here. Apple Fitness app. I was with my fiance and all of her girlfriends, and they're like, we're totally obsessed with these progress bars because they got to make their circles complete every day. And if they don't, they like go to bed with frustration, like, oh, I didn't get my circle complete.
I need my rings. It's true. You feel like I didn't do enough. I had just a couple more steps, whatever. You just want to feel completed. So the process, it does matter. It keeps you in check too. Yep,
totally. So that's what we're going for.
Well, Sean, thank you so much for being on Shannon Confidential. You've been incredibly informative, very smart. You're fun. You're easy to listen to. I'm probably going to contact you with a few more questions, but I am definitely going on. And again, everybody, everything Sean talked about will be below us in the show notes. And I just can't wait to get started.
Shannon, great questions. Keep up the good work. This is great.
Thank you so much, Sean.